right, it looks like we have just about everybody on, so let's go ahead and get started. First, thank you everyone for joining us this morning. Most of you probably know me. I'm Stephanie Clendenning. I'm one of the account executives here at Weiner Benefits Group. We are very excited to bring the series to you on alternative funding mechanisms for your medical benefits. You will see on the call today a few panelists from Weiner Benefits Group, some familiar faces, Louis Memolo and Mike Reckner, the partners, and Denise Renzi and Wendy Weingartner are here as well. And we also have Sarah Yee. She's here from Take Command. We're going to start the presentation off with Louis and Mike, and we'll go ahead and get started.
All right,
this is being recorded for us to send out afterwards, and I will be watching the Q&A and chat as we go forward. Go ahead.
Great, thank you, Stephanie. As Stephanie said, we're excited to present this information today for you, and most of you know who we are, but we thought it would be good just to remind you and maybe share with those that aren't familiar. Weiner Benefits Group has been around since 1938. We're in our third generation roughly. We have hundreds of group employer clients like those on the call all over the area, and we've been working with folks on their benefits at every level for many years now. And our mission is to help our clients achieve a sense of financial security and peace of mind for both themselves and their employees, and provide that sense of well-being from hire to and through retirement. And we try to achieve that through proactive, innovative solutions, knowledgeable, competent, thorough, and forward-thinking processes, so that we're always bringing the latest, greatest things to you to make sure that you know you're in the right place with whatever benefit structure or programs that you're implementing in your groups. So on the next page, Mike Reckner is going to talk about some of our benefit services.
Thanks, Louis. As Louis mentioned in our mission statement, we talk about security, peace of mind for employers and their employees. And if you kind of look at the left side of this slide, you'll see the first two bullet points: employee benefits, life, disability, and voluntary benefits. They're all products that we put in place for those unforeseen circumstances that happen in life. And our responsibility is to make sure that those products are high quality products, and when life happens, that those products come through for you so you can sleep easy at night. In our vision statement, we talk about the fact we provide personalized, accessible service with proactive and innovative solutions. So if you look at the next three bullet points: alternative healthcare funding, strategic planning, and personalized service, that's what we're doing right now with this webinar series. We're going to talk to you today about ICHRAs. We have Sarah here, who's a product specialist, who's going to give you a deep dive, and it could be a great fit for some of you, but for others, maybe not so much. So we look at that. We look at your personal situation and plan around that piece. The next bullet point is going to talk about your HR systems and services. For us, HR services and systems, the technology is very important. It's important to be efficient, but not at the expense of the client experience. So one of the things that you'll never find with us, the actual antithesis of this approach, is going to be like your cable company or your phone company. When you call and you get that, due to unexpected high call volume, you're going to be waiting for 3 hours. That'll never happen with us. We're built streamlined, and we're there to respond to your needs. The next piece, we talk about industry compliance. Of course, there's regular compliance that's already here, ERISA, different notifications that have to be given to the employees. But in addition to that, we have to look at the horizon, what's out there. As an example, for Delaware, we have the Delaware Healthy Families Act. We were one of the first brokers, if not the first broker, to do a webinar with the Department of Labor to kind of express what's going on there. And what you're reading about is the fact that this is going to come into effect in 2026, but there are some decisions that have to be made in 2024 that are going to have economic impact on our employers. So we need to make sure to keep on top of that. We make sure to keep you guys informed. And then lastly, we talk about non-qualified executive benefits. If we take a look at the marketplace today, executives aren't really staying the way they used to, and it can be a problem for leadership. So we develop different products that are in place that's beyond just compensation, that goes ahead and rewards the fact that people stay longer, the longevity. So any of those things we can help you with. Lewis is going to talk to you in more detail about the retirement pieces as well. Lewis?
So as we continue the arc of financial security from hire to retire, Mike discussing the foundational aspects of security, medical insurance, dental, life, disability, and those kinds of things, we start thinking about the other insecurities folks might have, and that is financial well-being, day-to-day questions. Am I going to make it? Am I going to be okay? Am I saving enough for retirement? Can I even pay my bills from week to week? So we take a holistic approach to financial well-being with various analytical tools and processes to educate and engage employees and participants to help them figure out how to save along the way. And as we develop these platforms and these plans to solve these problems and address these concerns for the plan participants and employees, we employ fiduciary oversight and governance to make sure that all of the plans meet compliance and fiduciary needs, looking at the employee and participants first in making sure that their concerns are met. And then obviously, as Mike alluded to and touched upon, we provide all of the administrative support to engage and follow through on those processes. And go figure, people actually do end up retiring. So as they start thinking about retirement, we look at Medicare and Medicare support, supplement, and those kinds of things, but then Social Security planning and individual financial planning. So we can take them all the way through from that first day, getting them solid and secure in their benefits all the way through to planning for and engaging in and settling in their retirement years. And in order to do that, on the next page, we have an awesome team available for you. It includes Mike and I and Denise and Stephanie and Wendy on the call, but we have Tom Gillibo, who is one of our associate advisors. James Barker is one of our benefits account managers, along with Allison. We have a claims and service support team, Adele Taylor and Laura Cheesem. They're very active in supporting, and those of you who are on the call probably have talked to these folks at least once. But then we have Lacey Gross and Jen Knoll and Matt Moody, who are all part of our ancillary support teams and account administration. So you have a full team, as Mike said, of folks that are readily available for you. So moving on from the commercial on Weiner Benefits Group, this is the first in a series of our alternative funding strategies webinars that we plan on. The next one coming up is going to be in regards to partial self-funding, but also analyzing and parsing up prescription costs and other ways to chip away at the ongoing expenses. Now, this might be for larger groups, but the partial funding idea is something to consider. And so we're having a dedicated webinar for that. And then we're going to talk about various ways to structure partial self-funding, including a consortium model on in June on the 12th. And then, I'm sorry, I skipped over on the 5th. We're going to talk about captives as a health insurance captive as another form of partial self-funding. So we have a whole series, and we'll be adding to this over time. But today's subject matter, the reason why you're all here, is on ICHRAs. And on the next slide, I don't want to take any oxygen away from our guest, but individual coverage health reimbursement arrangements. That concept is kicking off this journey on these webinars to inform you on the various strategies. An ICHRA, on a very basic level, is an employees obtain their own health insurance outside of a group. And then employers contribute a set dollar amount, and unused funds can be delegated as needed, carried over. There's whole structures behind that. But it requires expertise and components that will help us provide cost control, savings, risk removal, participation issues. But ICHRAs give you choice, flexibility, and control. So this is ICHRAs have been around for a little while, but structuring of the way you're going to hear from our good friend Sarah Yee from Take Command is going to be very informative on how to structure this to look like an employee benefits, an employer-sponsored health insurance plan. But at this point, Stephanie, did you want to introduce our guest?
Sure, thank you both. And again, I'm just going to remind everyone, please ask questions. We are watching that. I'm going to go ahead and turn this right over to Sarah Yee. She's from Take Command, one of the largest ICHRA providers. So we're super excited she's here for us today.
Thank you, everyone. And I'm just so thrilled to be with you. I'm flattered to have the invite, and I'm grateful for the time because I know everyone is busy. So thank you for joining. I am going to be talking about ICHRA, which is an acronym. Lewis just shared on the last slide a little bit about it. So this is intended to be a high-level discussion of sort of the why and the what and the how. And certainly if this is something that's interesting to you, there's a lot more that we would uncover in detail that would be, specific to your organization. But the agenda for today, again, like I said, we're going to talk through why clients explore the ICHRA model, what it is and how it works, how it fits into the market. So I'll give some case studies, and along the way, we'll share some trends and insights as well. And as Stephanie said, please ask questions along the way. If we need to stop and address those, we will, and we'll certainly try to leave time at the end to answer questions as well. So to start, before we get into the what is ICHRA, let's talk about why clients explore ICHRA and why benefit consultants suggest or bring up the idea of ICHRA. Because I know with Lewis's previous slide of the other options that you'll be exploring through this series, there's a lot out there. And in many cases, group plan benefits, a traditional group plan model works very well. It is sort of the gold standard, it seems, on the market today. But what we see in talking with thousands of employers that come through benefit consultants each year is that oftentimes a client can start to experience a pain point with their group plan. And these are the ones that we hear most common on repeat. And it can be one of these, it could be all three of these things. Whenever we bring this up, we tend to see a lot of like head nodding. Oh yes, this is us. We understand this well. It's usually that premiums are becoming too expensive. The group is struggling to continue to pay the rising costs of their group plan expense. It could be that the health benefits are getting too difficult to manage. This can look and sound a lot of different ways. It could be that there's risk on the plan. Maybe there's a high cost claimant that's driving up costs. We see groups that are growing and they're maybe acquiring smaller companies. And so they're layering on or they're adding in these group plans as they grow. And now it's becoming cumbersome to manage. So lots of different things. It could also be that there's a participation struggle. And then the third one, which is that it's becoming harder to recruit and retain talent. And I will say that number 3 seems to have taken a bigger focus kind of as we were emerging out of COVID, when the labor market was really difficult. And we just heard that a lot, that groups are like, we've got to pay attention to more than just our compensation to get the right people in the right seat at our companies. So if any of these apply in your case, you're kind of like, that could be us, then that's usually an indication that it's worth considering an ICHRA. And again, to Lewis's point earlier, this doesn't mean that ICHRA is a good fit. And I think maybe Mike said this too. It doesn't mean ICHRA is a good fit for everyone. The analysis that's done will really start to tell that story, but it is a good indication that it could be worth exploring. So the next slide really talks through more of the ways that a group plan dilemma can look and sound. I addressed some of these just a moment ago. At the bottom, you see this little quote that says, can't we just earmark some money for our employees? Which is what we hear a lot from finance departments and CFOs. They're like, for years, I've been wanting to just do that. I don't want to be in the business of picking health plans for my employees. I want them to be able to do that for themselves. And for a while, that wasn't possible. And maybe that's a good time to kind of stop and talk through ICHRA and how long it's been around, and also give a little bit of color to Take Command. So the ICHRA regulations were announced, they were written in 2019, and ICHRA became a thing in 2020. So it is generally pretty new. It hasn't been around quite that long, which might be why, if you haven't heard of it, that might be the reason. It hasn't been around all that long. And so you can imagine in the first year or so, these, folks that were moving to ICHRA were like really, they were innovators, they were ahead of the curve. Like, I don't want to call them risk takers, but doing something that was brand new to the market and kind of paving the way. But we're reaching a point now where, people are seeing, okay, ICHRA's stable. It looks like it's here to stay. It's working. We've seen success stories multiple times over with clients. And so it's becoming more of a standard tool in the tool belt to use. And let me talk a little bit about how Take Command fits into that picture. So Take Command has been around since 2014. In fact, our CEO started the company out of a personal need when his wife was pregnant with twins, and he was trying to figure out individual health insurance, and it was complicated. And he's like, there's got to be a tool out there to figure this out. So he started to develop that. And then in 2014, something called QSARA, a qualified small employer HRA, came into existence. And so we started to help small employers offer that for health benefits. And so we were sitting really ripe as they were writing those ICHRA regulations to, first of all, give input on what we were seeing in the market with small groups. And second, be able to be well positioned to help clients, the first clients that were wanting to move to the ICHRA model. So Take Command services clients in all 50 states, and we currently have about 5,000 employers on our platform, and they range in size from 1 and 2 employees all the way to 2,000. So I'm going to talk about the market landscape in a slide or two, but that just gives you a sense of what we do. And our goal is to partner with a wider group to be an education source and really ultimately help be the partner that you can trust when you're moving to an ICHRA model. We would be helping to service that and create the right ICHRA strategy alongside of your benefit consultant. Okay, so then next slide. So I hope that just helps you understand like why I'm presenting all of this to you. But let's talk about ICHRA and what it is. So ICHRA is a defined contribution model. It's not a defined benefit. So the idea that, with a group plan, you're focusing on maybe what type of plan you want to offer, who the carrier is, what the benefit level is, and then kind of funneling in the costs of like, okay, premiums, what's the distribution going to be between what we pay and what our employees will pay for this plan. With ICHRA, we're shifting that a little bit, and we are focusing on your health benefit budget and your goals. And we're trying to determine within the regulations, what is the right amount of tax-free dollars that you're giving to an employee to buy their own health insurance. And so the key point here is that this is the vehicle that creates those dollars to be tax-free and to be specifically able to be used for individual health insurance premiums. So on the next slide, Stephanie, it talks through the benefits of ICHRA. When ICHRA is a fit, this should be benefiting both the employer and the employees. For employers, this is your opportunity this was referred to as alternative funding. This is your opportunity to sit in the driver's seat of controlling your costs and capping your spend, and then finding a sweet spot between where you feel like it's good for your budget, for contributions to your employees, and where that ultimately lands for compliance as well. So there's a lot of decisions that you get to make in the process in order to meet those goals. ICHRA, sorry, Stephanie, I'm going to go back there. So ICHRA is a risk mitigation strategy as well, because you're shifting the risk from the employer level to the individual market. So versus being fully insured or even self-funding, where you do carry some of that risk on plan usage and costs, you're shifting that to the individual market with ICHRA. It doesn't fall to your employees. But the individual market is large and it's spread out. And so what we see, if you look at the trends on the individual market, the rates have been pretty steady and stable, and we don't see these volatile fluctuations in premium rate increases year over year. So it can be a nice strategy if that's something you're struggling with. And there's also not a participation requirement with ICHRA either. So some flexibility there. And then for your employees, the whole idea of ICHRA is that you're now putting them in control of choosing their health benefit. They are able to shop individual market plans based on their home zip code. So if they are in Delaware, or if they're in Pennsylvania or New Jersey or anywhere else, they're going to shop based on the zip code that they live in. These plans, in most cases, there will be 40, 50, 60 plus plans available to them between multiple carriers, many that you'll recognize, the names like Highmark, like Horizon, Blue Cross in New Jersey, Aetna, United, UPMC if you're in Pennsylvania. So a lot of different carriers that will be familiar to employees. And so they really get to ultimately choose a plan that meets their needs or their family's needs, whether that's cost, whether that's coverage, whether it's network, they get to decide. Okay, so then the next slide talks a little bit about the individual market. When we're talking about ICHRA, we want to go deep. We want to face that head on. We don't want to skirt around the fact that ICHRA relies on the individual market. So certainly if this is interesting to you, the way we do it is we're going to look at it through the lens of your census and where your employees are, what type of plans you may be offering today, and then compare it to what it could look like on an ICHRA. But generally speaking, the individual market is strong, it's growing. There's still some misconceptions out there about what these plans look like. They're all major medical plans. There's no medical underwriting, so the price is only determined by your age in most states, which we accommodate for in the ICHRA design. But it's not determined on your health. So sick or healthy, your price is your price on the individual market. The carriers are blind to any health information. So that's a big misconception. And then one thing I do want to point out that is different with ICHRA is when you move to offering an ICHRA for your health benefit model, your employees that are over 65 will move to using Medicare as their primary source of coverage. That's because plans stop being offered on the individual market at 64 because Medicare exists. So they move to Medicare, they sign up for any portion that they want, and they can use their ICHRA allowance to reimburse for their Medicare coverage. Okay, so we've covered the why, we've covered the what. This is a little bit about what we see in terms of ICHRA adoption in the market. So you see these three different market segments and how ICHRA fits in. For small employers under 50, we see that often this is a good entrance ramp to offering benefits. Usually they are concerned with budget control. They are unaware of how participation is going to play out when they start offering a benefit. But they want to do something for their employees. And so this is a way for them to set the defined contribution and also allow employees a lot of choices versus doing one single plan. And then on the opposite end of the spectrum in the enterprise market, we are seeing a lot more interest and adoption for large groups, particularly that might already be self-funded, but are looking for, again, more innovative options to solve for risk management and for some flexibility and choice for their employees. But where we see the most adoption and traction is in the mid-market space. So that 50 to 300, most that are on a fully insured is what we see, but some could be self-insured. And again, it's the pain point. So that's the reason usually they're coming is, hey, we're looking at some innovative options to solve for some things that aren't working for us. So consistent themes across the board are risk management and the need for choice and flexibility. I think the next slide has, yes, okay, perfect. So these are just a couple of case studies to try to bring to life what we've seen and how we have seen this play out. So two here that would be kind of under the risk management category. The first is a mid-sized company, about 100 eligible, but they were facing a 20% renewal. And this wasn't the first year they were facing that renewal. So they were looking for some alternatives. They moved to offering an ICHRA as their health benefit model. And in the first year alone, they had projected cost savings of $150,000. And then we have a large group here that had a national footprint of about 3,500 eligible, and they were self-funded, but that was causing some trouble for them specifically. And they had some ongoing growth with acquisition. So that was what I was talking about, acquiring smaller groups and kind of piecemealing together, adding on their existing benefits, and it became cumbersome and kind of lumpy. So what they did is shifted to ICHRA for specific geographic locations for different states, which was about a third of their population, because it solved for some of their unique needs and some of their unique goals. And they had some projected cost savings of about 1.4 million in their first year as well. And then the next slide talks through some case studies for choice and flexibility. Stephanie, if you don't mind, there we go. Perfect. So here we have a group that happens to be in the footprint of Kaiser. Kaiser's in not in your sort of tri-state area, but other states if you're familiar. And it's an integrated system. There's a love-hate relationship with it. And so but this might be applicable if you have a select number of employees that fall outside of your general footprint. Maybe you operate mostly in Delaware, but you have some people in Florida and the group plan isn't working well for them. You can create an ICHRA just for that population to help solve for their unique needs and allow them to shop their local individual market based on where they live. And then finally, we have a healthcare startup that was small but growing really quickly, and they were going to be hiring all over the place. So lots of challenges there in terms of getting something in place to attract good talent. So what they did is offer an ICHRA that with a generous allowance that could be used for not just premiums, but also for medical expenses, which was a nice way to offer a robust benefit for a very small company that needed to attract a certain level of talent. Stephanie, I just want to pause for a second. Any questions so far that I should stop and answer?
We do have a question. Lewis just answered it. Thanks for taking a minute here. So I'm just going to put the question and answer out there for everyone in case someone was thinking it as well. So for a company that has many employees who live in PA or Maryland, but their providers are in Delaware, could employees choose a Delaware-based plan network if their home address is in PA? Lois, do you want to respond with your answer here, or?
Yeah, what I said, Sarah, was that the employee would have to choose a plan based on the state where they reside, and they would want that plan to have a network that included providers in the surrounding states to be sure that their providers were in the network. Did you have other additions to that?
No, that's pretty spot on. I would say that's one of the differences with ICHRA. It's not really ICHRA, but with individual market plans is that now you are, because you're so much choice, you are sort of picking your team. So we kind of think of it as employees are looking at plans and carriers and coverage based on what they're trying to solve for. In most cases, the main network is going to be limited to the state footprint, and sometimes that can be a challenge. I will say though that plans, for example, Highmark plans, they offer for their PPO plans something called Blue Card, and Blue Card coverage expands the network to a larger footprint. And so oftentimes that can solve for cases like we're talking about where they may cross state lines for work or for care. But certainly something that you've got to kind of put through the lens as we're doing due diligence. There can be cases where that doesn't work. It just simply doesn't work for your employee population. In most cases, we can talk through it and just create a better understanding of the differences between the ICHRA and individual market model versus group plan model.
That was
Amy?
our only question so far.
Okay.
We can go ahead and keep going. We are at 11:05, just to be respectful of our guests' time here, our attendees on the call. So just a reminder.
Perfect. Okay, so yes, let's get to the next slide. I think there are just a few left, but the next portion is really talking about how you can design an ICHRA. So I'm just probably going to put a few ideas in your head and give you a sense of how flexible it is to create an ICHRA. Really, when we're trying to design an ICHRA, these are, in the simplest terms, these are the questions we're trying to answer. We want to answer the question, how much money should you be giving your employees for their health benefit? But then we also want to answer the question, what can they buy with it? If we just said our budget's $300 a month, go, we want to make sure that $300 a month is a good contribution and meeting your goals. So there's a lot of layers here that we're trying to, add in. You see all these questions underneath, and this is part of that due diligence and like analysis that we can put together. And the next slide, Stephanie, I think it talks through, there we go, perfect. So the ICHRA regulations have some levers you can pull to meet your goals. These are some that are listed here. There are a certain number of allowable classes that you can use to design out your benefit. Right off the bat, I will say, what is not allowable is to create classes based on title, tenure, time and position, rate of pay, or creating a class for just 65 plus. So those are things we get asked often. I just want to put it out there. Those are unfortunately no's, but what we can leverage are these that are on the left-hand side. Most often we are suggesting employee location, number 3. That would be, again, your geographic classes. If you span different states, or even within a state, there are what's called rating areas. So clusters of zip codes. Markets can look slightly different, and that allows us to create equitable designs. If you wanted to break it further and do design out differently for your salaried and your hourly population, that's a possibility. Or maybe you want to offer something to part-time, but you want it to be designed differently than your full-time staff. That is something that's an option. And then certainly these that are down towards the bottom, we see used less often because they're not usually applicable to most. But if you have a union or some other situation, it's worth bringing up to see if it's something we can solve for with the ICHRA regulations. And you also can, I think I mentioned this earlier in the case studies, you can still continue to offer a group plan next to an ICHRA. The specifics there are they can't be to the same population of employees. So you can't say full-timers, you have a choice, group plan or ICHRA. It's really, maybe it's we want to keep our group plan for our salaried employees and we want to move to an ICHRA for our hourly. Now, a couple quick things to note there. When you're looking at ICHRA as a full replacement for your entire population, you have the most flexibility in how you design it. If you're keeping a group plan for some portion of your population, there are some class size minimums that the regulations require you to meet. So we would just have to make sure that we can check that box. So in some cases, it's not possible to accomplish that if we're not meeting class size minimums. Okay, and then a couple other things, and I think we'll open up for questions. So I mentioned earlier that on the individual market, the plans are priced by age. So that green line that you see on the screen is what the market fit or market curve looks like, which is different from how you're used to seeing group plan rates, where they come in at a flat amount per tier, or at least that's how it's paid. But what we do within the ICHRA design is most cases are going to suggest an age-based or market fit allowance that's going to mirror that curve on the individual market, so that you're not disproportionately disadvantaging your older employees and then giving, maybe too much to your younger because of the way that they're paying for plans and how they're priced. But those are things you have options on as well. You can offer a flat allowance with ICHRA, or you can do that market fit curve. Okay, and then next slide stuff. Okay, so here I'm just showing you a little bit of how we start to present some of the data. One of the things that we will do again is look at where your employees live. So this is a bird's eye view of Newcastle County in Delaware. And we want to help you understand what the markets look like. In Newcastle County, there are 4 carriers available. There are 59 plans between these 4 carriers and 3 different network options. So a lot of opportunity for employees to choose plans based on their goals, their needs, and what's important to them. It'll look different if you were going over to Pennsylvania. And same thing if you're in New Jersey, the carriers will change a little bit. You will see Highmark also in Pennsylvania. When you move to New Jersey, I'd mentioned like you'll see Horizon, you'll see Ambetter. So some of the carriers and plans will vary. But zooming in from those, what did we say, 59 or so plans in Newcastle, here's an example of 3. And this is how we'd start to layer this in for, if you were looking at an analysis. We would show you a couple of plans that may be similar to what you have in place today and how the cost projection works out with an ICHRA design, and how it breaks down from what the employer pays, how much the employee would pay, depending on a plan that they would choose. But you will see, like I said, a variety of plans from bronze, silver, and gold. So those are the benefit levels, and deductibles as low as $0. Some that will have, $1,000 deductibles, all the way up to your, or all the way down to your bronze plans that will have higher deductibles but lower costs. Okay. And yes, Stephanie, thank you. So you want to click to the next slide. Okay. And I think I've touched on this, but this is a good visual of how the design process works. Again, we want to take into consideration all of your goals, the context of what you have going on today, but you do have these options to offer a flat allowance or a vary by age curve allowance. And then you can also layer in additional allowances for your dependent tier. So if currently you're contributing to your employee spouse, employee child, employee family tiers, that's something you can mirror within the ICHRA design as well. And then all within that process, we are collecting, we want to work with you to collect the data to run an affordability analysis. So making sure that we can tell you how affordable that ICHRA design is, and discuss that from a strategic point of view.
Thank you, Sarah.
Oh, you're so welcome.
I do have one question, and I kind of touched on it right here, but I'm going to bring it up because I'm wondering if there's another thought to it. Can ICHRA be offered for dependents of employees? So, we see that here, but what if they're thinking a group plan and an ICHRA for dependents?
Yes, so good question. So the ICHRA will be the offering for your employees. It's not something that you could offer only to dependents. But Stephanie, to your point, yes, we can mirror similar to how you would have on a group plan where you maybe offer more if that's part of your strategy. If dependents are participating, you can layer that in to the design. The individual market will work like essentially you're buying single plans. So if you are buying a plan for yourself and adding your spouse, you're buying 2 individual plans, and that's what determines what the total premium is. If you're adding children, there's a rate for children as well. So again, if you want to contribute more for dependent participation, that's an easy thing to do.
Thank you. Just a couple more questions. So can you have an ICHRA, with a group plan? Let's say you want an ICHRA for your Medicare eligible employees. You want to be able to contribute to them, once they kind of are at that age and they want to move to Medicare, is that possible, or is that not a class?
Unfortunately, so we get asked that a lot. It's not possible. It's not a class that's allowable. But when you look at moving to an ICHRA, either as a full replacement or to solve for a specific class like salaried, or maybe it's one geographic location, anyone that is in that class that's over 65 would move to utilizing Medicare. So in a different way, it can still solve for maybe some of the challenges that you might face with that employee population.
Yeah,
Awesome,
if I
thank
could
you.
add to that just a little bit, you hit it right on the head, Sarah, is some of our groups, from a claims and utilization and cost standpoint, that demographic can be problematic, right? That could be one of the motivations for a group to go to an ICHRA to kind of stop the claims issues. And part of that is carving out the Medicare population, which you would do in this scenario, right?
I mean, yes, if you can capture them sort of in a bucket that within what's allowable, yes. And that's what we see, often it's like, we know I've heard that before. It's like, we know we've got some claims. We know it's probably coming from this portion of our population. How can we solve for that by moving them to an ICHRA? And in reality, like Medicare coverage, now I'm not a Medicare enrollment expert by any means, but what I have heard time and time again is that the coverage is very good, and the prices usually tend to drop pretty dramatically from the costs on the individual market. So an ICHRA can be a win-win for those employees.
Absolutely, and that was my next leading point, was some of the clients on the call here, that we've done Medicare seminars to educate employees on the benefits of Medicare and to kind of relieve that stress of that time period as to here are the options. So if you're in that situation, we would be able to come in and assist with that through education and then help folks transition into a Medicare policy, whether it's Advantage or supplements or whatever the solution might be. And you're exactly right. Often the overall cost is a lot less, and it's often better coverage depending on the type of Medicare plan they have, Advantage or supplement or whatever. So we would be part of that solution and part of that transition to help those folks get comfortable.
Thanks, Louis. I had two more thoughts, Sarah. I know that we're kind of at the time, but I think these might be important to kind of touch on. And one of those is, groups vary in sizes, right? So if a group is over 50, can they typically offer a flat rate because of Affordable Care Act, or are there some stipulations with what can be offered based off the size of an organization?
So great question. Yes, they can offer a flat rate, and we can always look at that. I would say of the clients that are applicable large employers, 50 plus, most we are suggesting the vary by age curve or allowance, because usually it's a more budget friendly and more equitable way to also meet affordability. So kind of like it checks some of the boxes a little bit better, not always. And also there could be other things coming into play, like maybe there really is a reason that we need to keep it simplistic at a flat allowance. And we can always run those scenarios to say, well, if you wanted to just give 400 to everyone, this is what it means for affordability. This is what it would mean if a 30-year-old is shopping or a 60-year-old is shopping, and how that plays out.
Awesome, thank you. And my last thought here to ask about is, if groups, this is new, this is a new concept, right? So when they're thinking of this concept, what should they think as far as the rates go? Are they different, individual rates versus small group rates? I think that it would be important for us to mention that there is, a difference in, the plans, individual versus small group, and that those rates can vary. I don't know if Louis wants to jump in on that, or Sarah, or Mike, but I think it'd be important here when they're thinking of this concept to kind of bring that up.
Well, I can take a stab, and then Mike and Louis, if you have anything to add in, please do. So a few things. One is I can send over a link for a heat map of the United States that shows the trend for individual plan costs versus small group. You need to take it with a grain of salt because it's isolating like a bronze plan at age 50 in Newcastle versus the individual market. So it's not telling the full story, but it does give you a sense of like areas that the individual market might be more attractive than others. What I really always caution or want to communicate is that it's about the context of the client. It's really about looking at it through the lens of your costs, your census, your goals. Because we could be in the best county in the nation for the individual market, the cheapest with the best plans, and an ICHRA could still not be a good fit when we run the numbers. And on the flip side, we could be in an area where we might think ICHRA, the individual market maybe isn't as strong, but when we put it next to some of the goals and costs that you have and pain points that you have, it could actually be a clear winner. So I'm always hesitant to like give blanket statements there. That would be my point of view. I don't know if Lewis or Mike, you would say anything different.
Well, I would add, and then Mike, if you want to chime in, just that the employees are choosing their own individual health plan. So the consistency that we have on a group benefit plan where everybody gets offered the same thing kind of gets sidelined a little bit because an employee, where the consistency is in the cost, the capping the cost through a reimbursement level, right? So think of it as like a defined contribution. You're saying we're going to spend X dollars and no more. The employee can then choose whatever plan they want. So that inconsistency in what their choices are is where there could be the challenges, but we would be available to help educate and manage those processes the best we can. But for instance, if you have employees all over the country, the individual health market is going to be different in Utah versus Pennsylvania versus Maine versus Delaware, Maryland, New Jersey. So it's pretty vast. So having that consistency in plan design from a benefits coverage standpoint kind of becomes a secondary point to some degree, right? So that would be what I would add to that. Mike, do you have a thought?
No, I think you guys both hit it right on the head. There are going to be some places where certainly it's a great fit, but we also have to look at kind of Delaware and our unique state and the fact that Maryland is right over the line. Pennsylvania's right over the line. You may not be able to cross those state lines under certain plans. So you got to be a little cautious when you're dealing with those. But certainly in cases where you have an offshoot somewhere that's maybe another region and maybe the benefit that you have in place doesn't meet, that would be a great opportunity there with the ICHRA side. And also just the idea of kind of what's your strategy? Is it a defined contribution or is it defined benefit? So that's kind of what you're weighing.
Thank you guys for your input. Those were my, thoughts out there. I don't see that we have any more questions at the moment. Wendy, Denise, Mike, Lewis, any other maybe points you'd like to make?
I would just kind of encapsulate it in this thought process. It's a suitability and a goals-based program. It depends on what your needs and goals are for your group and your employees. And that's why we at Weiner Benefits Group would be happy to consult with you on this and whether or not it's a viable idea for you. And it's growing massively, as Sarah would probably attest. The fact that these are more prevalent now than they were a year ago, and the way the administrators like come in and help with the process is a testament to the fact that they're growing in popularity for a lot of different reasons, and we're happy to explore that with you. And I know Denise and Wendy in their normal renewal process are generally looking at those concepts at this point as alternatives to consider when we're looking at your renewals. So we're here to help you through the process is the point, and we're glad to do that.
Sarah, can you please quickly mention about the January 1st date when renewing ICHRAs?
Yes, thank you, Wendy. Okay.
You're welcome.
And thank you, because I did not bring this up. But ICHRA and individual plans do run as a calendar year benefit. So the quick points there are that you can still move to an ICHRA model anytime throughout the year. There's one exception for us, which is we won't implement a 12-1. It's really messy with the way that open enrollment nationally works. So we don't do that. But for most groups, I'd say there are many, many groups that don't naturally have a 1/1 renewal date. And so they're looking at maybe moving on 7/1 or 8/1 or 3/1, and that's possible. But that first year, it will be a short plan year. So it'll be a plan and a deductible, and that will reset on 1/1. It's not really something that can be solved for well. It's kind of a Band-Aid you rip off in year one. But we can talk through, and this is really where the Weiner Benefits Group will come in handy to advise you on strategies to maybe offset that in year one, that might be outside of an ICHRA, or just help us think through, like, how do we define that contribution for year one in order to accommodate? Or do we just say, hey, we're giving you the opportunity to shop for plans on your own, take that into consideration in year one?
And one other thing I would add too is that just a little plug for Take Command. We do vet our vendors as far as who can actually do this, because there's a lot of people out there that say they can do it, and there are people that can do it. And obviously Sarah's on the call. Take Command does a nice job. They have a nice platform. So that's one of the other things to take into consideration as well.
Awesome. Well, thank you all. Thank you to everyone who attended today. We appreciate you. We are here if you need anything. Have any questions come to mind, please reach out to us at Weiner Benefits Group. We always have, Sarah to lean on if we need to look at the resource in general for you. So thank you again for your time, and please watch for our next invites. They'll be coming out in the coming days, or probably next few days, next week. So thank you. Have a good day.
Thank you so much.
Bye-bye.